All right. Good morning. Good morning. Boy, have we got some fun things to talk about today. Oh, my goodness sakes. What in the heck is going on in the markets? Not a single thing we didn't predict. Not a single thing we didn't predict. All right. How's everybody doing? It's good to see you. Hey, my name is Leon Turner, and I am at a new place. So I'm kind of out of my element just a little bit. So we'll see if we can't make things happen today. Whole new computer setup and everything. I'm in my summer home up in Logan and moved over the weekend. Had a good drive up, closed everything up down there in St. George. We'll be back in St. George. Don't worry about it. We'll get back. School year will start up again. We'll start teaching school again in the fall. But right now it's summertime. We're going to have a little bit different schedule. Mondays and Wednesdays, school teachers are lazy, right? We don't like to work in the summer. So so we're just gonna work real hard on 3 days of the week. All right. Tuesdays, Wednesdays, and Thursdays are still going to be class. We're still going to have the labs. So still come and join me on Tuesdays, Wednesdays, and Thursdays rather than Monday, Tuesday, Wednesday, Thursday, Friday. All right. So I've actually got a plan, believe it or not. I actually have a plan. Look at this. Here's the plan for the summer schedule. All right. Summer YouTube class curriculum. This is our summer schedule and what we're going to do. And I want to go through it with you. So just do this real quick. We'll get this little PowerPoint out of the way. Just let you know what we've got planned for the summer. So if you haven't subscribed to the channel, come and join us and go through this curriculum with us. Now, this is for the next 8 weeks. We're going to be here longer than 8 weeks because, well, summer lasts longer than 8 weeks. So this is just for the first 8 weeks, and then we'll do another setup and another schedule, and we'll learn some more things. All right. So this is what I got to do it like this. I'm a school teacher. I got to have a lesson plan, right? You know me. So we're going to go through and this is a lesson plan, summer YouTube class curriculum. So on Tuesdays, we're going to have every Tuesday, Wednesday, and Thursday, right? Tuesdays and Thursdays are going to be the morning classes. They're going to start at 8 a.m. And then Wednesday, we do an afternoon class, which is 1 a.m. or 1 a.m., 1 p.m. And this is Utah Mountain Standard Time. All right. So if you're outside of Utah, make your adjustments. Most of our students are from Utah, not everybody. And we're glad to have people outside of Utah. But a lot of our students are from Utah because they're from the university where I teach. All right. So we got a lot of students in here. So that's good. And it's good to have people from outside the Utah area and outside the community. Everybody's invited. So on Tuesday, we're going to have morning classes. Wednesday, we're going to do afternoon classes. And then we're going to kind of shake it up a little bit and cover some different topics so we can have some fun and learn different things along the way. But Tuesdays are going to be primarily, or not Tuesdays, Wednesdays are going to be primarily focused on day trading. All right. Because we're going to be doing it during power hour. So we like to scalp a little bit and learn a little bit about the strategies that you can do when day trading. Now, it doesn't mean that you have to day trade during power hours. It just happens to be that's when we're going to teach the class. And I like to teach the class during power hour because I don't really do a lot of trading in power hour. I like to trade late morning, late afternoon sessions when I'm day trading. I like to start at the top of the hour and just trade for the first 10, 15 minutes of every hour just to see if I can't get some nice move. That's my little strategy, and I've told that to you a lot. And so a lot of times I teach these classes when I'm not really trading real money. So I do a lot of trading real money. In fact, it's got to the point in my life where I trade for a living. All right. I can really say that. I make, the rule is that you, when you're in the industry and you're registered with the government, you can't say you trade for a living unless you derive the majority of your income from trading. If you have another source of income that doesn't make as much money as you're trading, you can't say you trade for a living. That's kind of the rule. So I make more money from trading than I do anything else. Therefore, I trade for a living. All right. That's my primary source of income. It doesn't mean I don't have other source of income. I do. I have real estate. I have all kinds of other things. I have businesses. I have Pet News Magazine, which we got to talk about today because I got an amazing thing for you. And but I do make more money trading than I do anything else. So I can, I'm a school teacher too. That's a big salary. That school teacher one almost pays for the gas to get back and forth from home to the class. So that's a big one. And but I trade for a living now, technically speaking. And so I'm very happy to be able to say that, making enough money in my trading to be able to say that's my primary source of income. And we're going to go ahead and talk about what we're going to do in this class or in this next class. So this is the first series. You can see on Tuesdays, Wednesdays, and Thursdays are our class. basically on Wednesdays, we're going to be doing day trading. Tuesdays and Thursdays, we're going to be focusing on stock market stuff. And we've got seasonals lined up too. So we're going to do a little bit of seasonals. We kind of were doing some seasonal stuff. Then I don't know what happened. My brain went crazy and we stopped doing it. We forgot that we were doing seasonal stuff. Although we do put the seasonal stuff in Pitt News Magazine all the time, but we're going to circle back around. We're going to do a little bit more seasonal stuff. Not all the time, but sometimes we're going to be doing seasonal stuff because I love the seasonal stuff and it's good. And we got to talk about that, the seasonal nature of markets. All right. So this week, this is the weekly objective. All right. We're going to understand the UBI portfolios. We got to talk about that. That's always a kind of our core stuff because it's ended up being, well, my primary source of income is the UBI, Universal Basic Income Strategy, that we've talked about and that we've created. So we're going to practice chart setups with trend lines. We got to understand what the VWAP is and that kind of stuff. And that's my first weekly objective, and then to identify seasonal strengths and utilities and staples. So we're going to do that kind of stuff. We'll have fun with that this week. And but I have something really cool I have to show you. All right, I just have to. I have to brag. Can't help myself. Have to do it. So we're going to come over here and I want to show you something. I want to show you. Well, they make me do it like this. All right, here we go. So I want to show you, and let's make this as big as we can. So let me show you Palantir. Palantir. Now, you know, we've been talking about Palantir lately, and I've been telling everybody, okay, I bought about $100,000 worth of Palantir right here. Now, I bought a whole bunch of Palantir, and then as markets started to rise, I started to sell some off, right? Because that's what we do. We do like accumulation distribution model in this class. So when we're down in these regions here, we buy lots and lots of stuff. We buy all of our, and I bought it right down in here. I bought a whole bunch right in here. And then as it starts to rise in price, rather than buy more, what do? We start to sell out, right? Because we don't want to be building upside down pyramids. And I talked about that in great detail in Pitt News Magazine. So this is this month's issue of Pitt News Magazine. If you don't have Pitt News Magazine, I'd highly recommend that you go get it. If you're not familiar with it, oh my gosh, I got to let Claire tell you a little bit about it. And then we're going to go in. I'm going to show you the article and I'm going to brag a little bit. I got to show you this. It's funnier than hell. You got to see this.
Hey everyone, it's Claire here. Are you ready to take your trading knowledge to the next level? Welcome to Pitt News Magazine, your trusted source for trading intelligence. Whether you're a seasoned trader or just starting out, this magazine delivers the insights you need to stay ahead of the market. Featuring articles from experts like Dr. Scott Brown, Aidan Gray, myself, and of course Mr. Lan Turner. Pitt News brings you exclusive strategies, deep dives into market psychology, and powerful trading techniques. Find out about the exponential power of growth, seasonal trading secrets, and even Lan's latest wild eye, crazy eye iron butterfly strategy. Each issue is packed with expert trading strategies, top stock picks, key seasonal trading insights, and comprehensive analysis of commodity futures and ETFs. You'll also find tips on technical analysis, option strategies, and much more. No matter your trading interests, we've got you covered. And the best part? You can learn your way. Listen to each recorded article, read the full in-depth lessons, or watch our video breakdowns. It's trading education on your terms. Right now, we're offering a special deal. Get your first full year of Pitt News for only $19.97. That's 50% off the regular price. 12 issues of powerful trading insights, backed by our 100% satisfaction guarantee. So, don't miss out on this limited time offer. Head to pittnews.com and subscribe today. Empower yourself, enrich your trading strategies, and stay informed with Pitt News Magazine. Trading intelligence right at your fingertips. Okay, let's get back to Mr. Turner. Thanks for sticking with me.
All right, let's go in. I gotta show you something. I gotta brag a little bit. You gotta show you this. You're gonna laugh your ass off. I promise you. Watch this. We're gonna slide down through Pitt News Magazine. This is all the really cool stuff that you guys that don't have the magazine are missing. But we're coming down here to the first article. And this is my article. I wrote this. It's called The BlackRock Algorithm, My Conspiracy Theory. All right. And I go through and I outline the BlackRock algorithm. And I talk about it. And I talk about how big it is and how it basically controls the entire stock market. All right. And the stock market is built on rules. And you can actually draw them out in a diagram. Here it is. Here's your diagram of the stock market. All right. We also talked about in this article about upside down pyramids, accumulation, distribution. We talked about that model, right? So we're not buying into strength. We're liquidating into strength. And then we talked about the news. Now, this is the part I want to kind of highlight for you because we talked about the news and how the news is more of a cover. The news never tells you what the market's going to do. It only tells you what the market did, right? It only tells you, oh, the market fell and this is why, or the market rose and this is why. And then if the market doesn't do what they expected it to, it's like it doesn't make sense. Oh, this market had really good earnings, but the market fell. Well, it must be because of this, or it must be, and they make excuses for it, right? They do this all the time. Oh, the market fell really hard and it should have risen, or it rose and it shouldn't have. It should have fallen. The T-bills or T-bonds or bonds were down and market it went down to, oh my goodness, it's just not doing what it's supposed to. And they make up excuses, right? And they cover for the market, tell you, oh, they don't know what the hell they're talking about. All right, but they make excuses for the market all the time. Here's an example. See this is Tesla. And look at this. This is the drawing I drew of the stock market years ago. Look, it looks exactly like Tesla. You'd think I'd drawn this before or after Tesla, but I didn't. I drew this before Tesla. So you come in here, this is the upside down pyramid. This is a great article. If you haven't read it, this is like going to be one of my premier articles I need to hang on the wall or something, because this is like it's become like, this is like commandment number 1 of trading. This is how you trade. This is the game right here. This is everything. This is the fundamental foundation of everything that we do. This one article right here. And I want to show you something that's really funny. And the reason I bring that up is because I know many of you have read that article, and so you know what I'm talking about. And a lot of you have been in this class for a long time, and so you know how I do stuff and how we count and we measure and we look for different trends and drives, drive 1, drive 2, drive 3, A, drive B, drive C, drive. We do all that kind of stuff. We look for the probabilities of trading, right? I always say, if you don't know the probabilities of trading the stock market, you got no business being in the stock market. And so we need to know the probabilities. Now, look at Palantir flushing like a toilet right here today. Look at this. And they had earnings, an earnings call Friday, close of business. I couldn't wait for this class. I'm so excited to talk to you about it. So they had earnings on Friday, and I'm going to read you their earnings. Look at this. Watch this. You're not going to believe this. Here's their earnings. Many of you might know this, but I'm going to read it to you. This is the earnings for Palantir. Palantir Technology reported its Q1 2025 earnings today, delivering results that beat revenue expectations and matched consensus on earnings per share. Adjusted earnings per share, 13 cents, in line with analysts' estimates. Revenue, $884 million, up 39% year over year and above the $864 million consensus forecast. Look at that. Holy smokes, 39% over the year, above the $864 million consensus forecast. They were $864 million more than the consensus. U.S. revenue grew 55% year over year to $628 million. 55%! Holy cow! With U.S. commercial revenue jumping 71% or $255 million. You don't see this in companies. They don't grow like this. U.S. government revenue rose 45% to $373 million. This company is exploding out of its shorts. Profitability gap net income was $214 million. 24% margin. Adjusted income from operation was $391 million. 44% margin. Oh my hell. Cash position. Look at this. Ended the quarter with $5.4 billion in cash. Last year, the whole company wasn't even valued at $3 billion. And they got $5.4 billion in cash. Are you kidding me? Revenue projections, guidance updates projected at $938 million above the $899 million consensus. Over $100 million over the consensus. Can you believe that? Oh my hell, this company is on fire. Full year 2025 revenue raised to $389, $390 billion, 36% growth in 1 year. Are you kidding me? 36% growth in 1 year, up from a prior guidance of $3.75 billion. Oh my hell. These guys are freaking on fire. U.S. commercial revenue now expected to exceed $1.178 billion in 25, representing at least a 68% growth. Are you kidding me? Oh my God, this company's on fire. Despite strong results, PLDO stock fell over 5% after hours, literally due to investors' expectation after a 64% year-to-date gain. Oh my hell. Can you believe that? Despite strong results, Palantir stock fell 5% after hours and is still flushing like a toilet today. Yeah. Why? Why would a company that is on fire like that, just literally blowing the doors off of everybody, have the best earnings that you could literally put on the paper? Unbelievable earnings. And what happened to the market? It flushed like a toilet. If that doesn't say something to you about these markets are manipulated and controlled, nothing will ever convince you that this is all one big carnival game. I sold out of all my long growth positions. Now I still have some hedged positions, the yield max stuff, which gives me dividends, and I ain't selling that because that's got dividends that are covering the downside, and I'm not worried about it, and it's for the long haul anyway. But I did have $100,000 in growth, and I'm out of that thing, almost completely out. I had just a little bit left in, but I covered it with a put option. And so I was hedged with a put option. Now look, our put option that we put on in this thing, the put option we put in right here the day before the day before the earnings call, I put on a put option right here to cover the whatever I had left in there, which was almost nothing. I took almost everything out because all the way up that trend, I kept taking profits. That's what we do, right? We've learned not to build upside down pyramids. You know, without a shadow of a doubt, there are a million people right now who bought into that strength all the way up. Buy. Oh, making all kinds of money. Buy more. Spend the money I made. Buy more. Buy more. And they are sitting at the top, just chewing their fingernails off, knowing that Palantir is going to have good earnings and that they think that market's going to pop and go to the moon. And instead, with those fantastic, unbelievable earnings, the market flushed like a toilet. Why? Because that's how Aladdin, that's how Palantir, that's how BlackRock, Vanguard, and State Street take all your money. It's the classic example. I couldn't show it to you any better. I couldn't say it any better. I couldn't do it any better. I couldn't give you a better example than right there. Proof in the pudding. Right there. You're watching it happen. All right. This is accumulation distribution. This is what I've been teaching for 10 years, trying to get people to understand. All right. You do not buy into strength like this. Market's going up like that. It's going to flush anyway. I don't care how good the earnings are. I don't care. It's all driven by an algorithm. All right. And the name of the algorithm is Aladdin, and it's owned by BlackRock. And BlackRock has sold that algorithm, licensed it out to like 10 or I think it was like 13 companies. So 13 of the biggest brokerage houses in the world are all running the same system. It's like a hive mind. It's like, how many of you watched, that Starship thing? As kids, we used to watch that. I should drop that idea because it just left my brain and I don't know what I'm talking about. Star Trek? Yeah, Star Trek. And they had the Borg. Remember the Borg? And it was all one big hive mind. And everybody, they could read each other's minds and everything. That was the Borg. And so that's what this has become. The stock market in this world here, Earth world, the stock market, the U.S. stock market is a hive mind controlled by Aladdin, which is a big algorithm that's been sold to all the big firms. All right. So it's become more and more and more predictive based on those rules and the logic that's built into those systems. And those systems, we reverse engineer them right? We don't know what they are because they're private, they're secret. It's a black box, right? But we can reverse engineer them. And we know that through reverse engineering these models, and we've looked at them a million times over, we can pretty much predict what the market's going to do. That's why I got rid of all my shares to the long side on Palantir. Knew that they were going to have good earnings. That was kind of baked in. We knew that they were going to have good earnings. They've been doing well. The president of Palantir's been going on the circuit. You've been watching him. He's been on every podcast on planet Earth telling everybody how much money they're making. And so here we are watching our put option. Just look at that. It's up $700. Now I'm going to take that profit because as soon as it cools down, it'll calm down. And this is a very short option. You can see it's only got 10 days left. And the implied volatility is really high right now. So the implied volatility shot boom through the roof. And so as soon as that implied volatility comes back down, that value will drop. So even if the stock market keeps going down, that put option will probably not make a whole lot more money than what it's making right now, just because the implied volatility is so high. And how far down do we think that market's going to go? Well, it's going to go back down to the Delta Kona probability. It's going to go back down to the one standard deviation. That's what I believe in. And we'll see. I don't know for sure. It might have some strength in it that's unbelievably strong, which it should have. But if it does what it's supposed to do, our first target is 38.2. I think it's going to go right to that number. And that's where it will break those blue lights. And it just has to break the blue lights. That's all we're looking for. That's the mathematical model that we've built to reverse engineer what BlackRock does. So that blue light is something I've created. I didn't create the blue light. I reprogrammed the blue light. The blue light actually comes from Wells Wilder. But I changed the formula a little bit, not a whole lot, but I've changed that formula to dial into what I've seen BlackRock's algorithm do. All right. So that's been dialed in a little bit. And the number is 72. So if you want to know, if you come back here, all of our back testing, all of our studies, all of the things that we've done with the bulls and bears indicators right here, and the sensitivity slider for the BlackRock algorithm is 72. All right. So if you want to set this up, and then we put it on the progressive formula. So there's traditional, progressive, aggressive, Bollinger Band, Keltner bands, 10 by 8 MAC. We use the progressive formula set at 72, and then the blue lights. Okay, so that's the blue lights. Those are the little algorithmic points that the market likes to return to. And that's going to be programmed in based on just past experience. Does it mean it's perfect? No. Pretty darn close, though. All right, and then we have what turns the price bars red, yellow, and green is the one standard deviation. All right, that's the neutral zone, and that's the Fibonacci zone. Now, the last bar is always yellow when you get the bulls and bears turned on. So the bulls and bears is a reversed engineer of the algorithm for the BlackRock system. That's what it's become, right? That's what we've turned it into. So that's what we're calculating and measuring with this. So this blue light is coming in here. It's got to intercept. It's got to touch the price. And wherever it touches the price is usually kind of where we count that that's the end of that drive. Okay, so this is drive 1. This is the A drive. Okay, so this is A drive. It's got to pull back, give us the X1S A1, right? And then it can take off and go again. Now, how far back is it going to come? Well, we generally expect it to come back into this Fibonacci sweet spot, which is the one standard deviation. And so what we're going to do is we're going to take our money, and we had all of our money put in right down in here, right? We bought a whole bunch right down in here. We started accumulating shares here. And I didn't accumulate much here because I knew that wasn't a good place to be accumulating shares. I think I might have had a little bit in there, but we know that that's a bad spot, really low probability. That's an X1S A1. So an X1S A1 is really low probability of being the bottom, really low probability of success. So I don't think we put a lot of money in there. Maybe just a little bit, just in case. But we're going through the accumulation stage here. We figured it would come into a second accumulation stage, and it did. Just like a train on rails. It wasn't very strong down. I mean, it was too strong. So it only came down, barely broke the previous low, and then it started going back up again, which gave me pause. And I was like, oh, that's too strong. This is a good market. So that's where I started loading up right there. All right. We had our little green marker right here. We knew to load up. We saw the MACD making the crossover from red to green. We've talked about this 100 times in this class, and that market took off and went to the moon, right? And it went up. We had our nice little shelf in there, little pennant formation, right? And we ended up driving all the way up, and that thing just kept going and going. And so by the time I got to here, I had all my money into the market. I didn't buy up into here. I started to sell out. I started to liquidate as the market go up. And as it would go up, I'd take 10% off. I'd take another 10% off, take another 10% off, take another 10% off. And I was taking it off all the way up that trend. It got up there to that peak. I took almost everything out. And then I covered what I had left with a put option. And so now this market's still flushing. We're up $750. The implied volatility is going crazy. Where's this market going to stop? It's going to stop right down here. And we're going to start putting money back in at about 38.2. Now, sometimes you can put money in right in here just a little bit. There's another number right here. Let me show it to you on the Fibonacci scale. It's called 28.3, 23.6. You can put 10% back into the market at that point right there. Sometimes I'll wait, depending. Now, this is a strong market, 23.6, probably not a bad place to be putting some money in on this one as we bounce back. We're looking to build our position coming down now, right? We want to be buying into the market as it comes down. But you don't have to buy up at the very top, because you can put a little bit in there if you think it's just going to turn and go back up like that. I don't think it is. I think we're going to see this thing come back down into at least 38.2. All right, that's a really strong number for it to hit, 38.2. Whether that happens today or tomorrow, I don't know. We're going to have to wait and see. But 38.2 is our first goal. We'll put money back in at 38.2. And then if it comes down to 50, we'll put in more money at 50. If it comes down to 61.8, we'll have almost all of our money back into this market. All right. Now, there's another one down here, too, that if it comes down a little lower, you can add a little bit more. So we're going to put another fib line in here at 78.6. We're going to put more money in if it comes down, and we're going to hit that number. All right. Now, I don't think it's going to get all the way to 78.6, because you saw the fundamentals of this thing. The earnings on this thing were absolutely phenomenal. So this market is a really good market to get into, and everybody was upset, nervous, and worried because they missed the trading opportunity. I said, don't worry about it. It's going to come back down. You wait and see. No, it's not. Palantir will never come down again because it's just making too much money and it's growing too fast. It'll never come down again. I said, you can't not do it, because BlackRock, that's how they make all their money. They need to take all your money by having you go up there, and they need to shake you out. That's what they're doing. They're trying to shake you out. So if you have all your money piled into this thing and you didn't sell out, you didn't cover yourself with a put option, and you just have all your money, and right now you're losing everything. You're just like, oh my God, I'm losing everything. They need to shake you out. They want you out of the market, and that's what they're doing. That's why they did this. Good news, flush the market. What the heck is wrong? Flush everybody out. They're freaking out. They're jumping out. They're all underwater. They built their upside down pyramids, and they're dying right now. People are dying out there. They're jumping out of windows. You know they are. You can feel it in the market. People are scared. They're bailing out. They're like, what happened? Why is the market flushing like a toilet? I've lost all my money. I put everything I had into Palantir, and it's dropping like a rock. Oh my God, the world's coming to an end. Donald Trump did this. This is Donald Trump's fault. Donald Trump's fault. He did this. It's those, this, that, and the other thing. It has nothing to do with any of that bullshit. Has to do with the BlackRock algorithm trying to shake out you guys so that you'll give them their money so that they can have all your money. And then it's going to turn around, and it's going to turn, and it's going to go back up, and we're going to go into a drive two. All right. So if you do have money here, they're going to do everything they can to get you to sell. That's what this is all about. Sell your Palantir. They want this Palantir shares. All right. There's only a certain number of shares that are available to own in Palantir. And if you own some, they're pissed off. Why? Because you have it and they want it. All right. So you can go look up how many shares are available to buy in Palantir. And there's a limited amount. This is a limited number of shares. So you can't have there. It's like, oh, just go get more shares. You don't need mine. No, there aren't any more shares. There's none left. All right. So the only shares that they can get are yours. So they need you to sell yours so that they can buy them. And this is how they do it. So they ride the market up. They shake you out and get you to sell your shares. They buy your shares as the market comes down. And then when the markets, they got all their shares they want, they drive that market right back up again. It's all one great big carnival game. It's all fixed. It's all controlled. It's all manipulated by the big players. All right. All they're really doing is just buying low, selling high. Buy low, sell high. Why didn't you sell high when it was up there? That's the question. Why didn't you sell it when it was really super expensive? I wanted to buy more. Okay. You keep doing it your way then. Don't listen to me. I'm just some school teacher on YouTube. All right. So as we come in here, Palantir, this option is up $770. Could it keep coming down? Let's go down and look at a little shorter term time frame. Let's come look at the 2-minute chart. Could it keep flushing? Yeah, it's probably going to flush a little bit more because it's got to go down into the one standard deviation. And as long as it's flushing, we can hold on to this thing and see how big it's going to go. But its implied volatility is really high right now. So that's why it's up there. As soon as the implied volatility calms down, this thing will drop all the way back down to like $300. So you got to take your profits while it's hot. Because even tomorrow, unless the market flushes another really hard toilet version, it's not going to go back up to $800. The implied volatility will go down to maybe $400, $300, and $500, somewhere in there. It'll lose half its value because half its value right now is implied volatility because of how volatile the market is. So we got to take our profits on this thing when we can, while we got them, while it maxes out. Now, this market's going to come down and it's going to intercept that blue light. You watch and see. Mark my words. It'll come down and it'll come down eventually, and it'll cross that blue light will catch up to it. Because that blue light, you'll notice how the dots between the spaces between the dots are different sizes. So notice in here, the really big space between the dots, but yet up here, they're really tiny spaces, and see big spaces. So as this market starts to accelerate away from the dots have these bigger gaps to catch up to the market. And as it starts to come down and slows down, you can see how the gaps down here get closer and closer. All right, so they get closer and closer. That means the market's slowing down. And then if the market takes off and drops again, the little dots will gap really big. And eventually those dots are going to intercept. They're going to come back and they're going to touch those blue lights. And when it does, this downtrend, this shakeout is going to be pretty much over. All right. Now, it doesn't mean it can't flush out and come back again, and flush again tomorrow. It can. But right now, you're going to see this thing probably turn and start to ease back in and come back up. Buyers are going to start stepping back in because they know this is a good market, right? They know this is a good market. Now, how far down it's going to go, we don't know. Look, it's already gone from 800 to 785. Just that little pop back right back there. Look, we lost, we were up over $800. Now we're back 785. So as this thing comes down and slows down, that'll be about the max you're going to get out of that thing. So we should probably take it off right now just because we're here and we're doing this. So we'll take this off. We're going to come in and take this option off. How do we take it off? Come on, Lan. Figure out how to take that thing off. Chart, Palantir. We're going to take it off at cost base. Look, we've made 79%. That's pretty good. Don't make that at Cash Valley Bank in a year. So we're going to come down here and we're going to liquidate the option. We're going to take those profits off. So mark it out of that thing. See if it'll get us out. There we go. So we closed out. See, it was up over $800. Now it's at 760. So you can see that's really all implied volatility. It's not, that's what the gain is. It's the nervousness of the market. It doesn't have anything to do with the intrinsic value. That's all extrinsic value. And we lost what? It was like at 850 at one point, right? We lost $100 just dinking around here watching it. Doesn't mean it can't go back up. Certainly can. But right now we're kind of coming down here and these blue lights will intercept. I don't know where it's going to turn. We might be out here, might be out here, might be down here. Somewhere I think it'll turn and it'll start to go back up a little bit. Even if it doesn't go up, it'll probably just go sideways a little bit, something like that. It might shoot right straight back up. Some people might get excited and burn this thing right back higher. I think Aladdin would like to see it come down farther. Okay, so Aladdin would like to see this thing come down farther. Now, over here, just while we got this up on the end video, we sold this call option. 800 market value is 2,000. We're up $900 on this thing. We received $1,100, and the market is rising. And we sold this call option right here. If the market keeps going, that's not really that good for us. All right. So we're going to take this off too. We're just going to go ahead and mark it out of that thing. So we took our profits on that one too. Now the problem is I'm not keeping track of these. I got my spreadsheet, and I've got to get you guys this spreadsheet. But I need to come in and I need to fill in all this stuff. We've been doing all these options. We've been making all this money, and if you don't track it individually, you lose it because it just ends up in the cash account, and you don't know where you made it and whether you're your long-term option is making money and where you break even and stuff. You got to track all this stuff because your brokerage firm doesn't track that for you. So they just take the profits, that $400, and they just throw it right in here, right? And they just give you that $400 and they put it in your cash account. Now you're like, well, I don't know, where that is. You can eventually go and look at that on your statement and it'll show you, but we want it in a spreadsheet so we can see that we paid this much for the long call and we've been selling call options against it, so we got additional premium on it. So it's making a lot more than it shows here. This shows $1,500 up, but we're actually making a lot more than that because we've sold a bunch of call options and collected premium against it. And we got a bunch of those that we got going. So I need to get that updated. And the problem is it's hard for me to update. It's hard for me to update the demo stuff when I've got all my real money stuff that I'm spending all the time working on. So I apologize for that. So just work with me. There's only so much time in the day. And then, unfortunately, demo stuff comes last, right? I hope you understand that. We also have, now I lost my train of thought. I was going to tell, UBI portfolio. So the UBI class. So the UBI stuff, I'm still working on the old UBI stuff. Hold on, I'll bring it over here on my screen for you so you can see it. I'm still trying to build out the new UBI. These are all just models that I'm modeling. So I'm trying to build a new UBI spreadsheet for us to track our dividends and our funds and all that kind of stuff. And these are just 2 models that I've got of all my positions. I got about 10 of these. And so I got to build 10 of these models, and then I'm going to string them together, and we got to have our cash that we've taken out of the market. We've got loans that we've got to pay against it. We've got cash that's sitting in the account. So we got to take all that stuff. And then if we go and buy, this is our UBI, Universal Basic Income portfolio that we're working on, right? And I got to get you this new spreadsheet. You get that with the Pitt News Magazine. You got the old one with this issue, but with the new one, we get this one here, this new spreadsheet. So you get the new spreadsheet with your Pitt News Magazine subscription, but it's not done yet. It's still working on it. So I'm just building out these little square models to bring everything into one little thing. And then if we take something we buy like Palantir, I bought a whole bunch of just the PLTR, not the PLTY, for the growth side, right? Well, we got to take that into consideration because we just made $10,000 on that one. Well, it's not taken into consideration on this spreadsheet, the old spreadsheet. So we got to take that into consideration because it makes it look like your spreadsheet, like you're not making any money. Well, you took $100,000 out and put it into something else that isn't in your spreadsheet. So the spreadsheet's not complete. So we got to work on it. We got things to work on, right? This is a working class. It's a live class. We're got things we're doing. All right, Chad. I'm not trying to be funny, man. It's just my personality, my little sweetheart personality. I'm not for everyone. I'm not for everyone. Okay. Let's see. What else we got going over here? Chad, if it had such good earnings, why is it flushing so hard? I'm thinking Aladdin is on it. Yep, exactly. You got it, man. They got to take your shares away so that they can have them because they love this stock. They love it as much as we do. And so they want all the shares. They want all those shares that you guys have. You bought a whole bunch of shares as that thing was rising, and that pissed them off because now you have shares that they want. So they got to get you to flush out. And they got $10 trillion that says that they can make you flush your shares out. They can make you sell them by making that market go down when it should have gone up. And you're going to freak out and think something's wrong. And then you're going to blame it on Donald Trump. You watch the news tonight. You watch the news. They're going to blame everything on Donald Trump because that's what they do. And he's got nothing to do with it. He tried to make the market go up. Remember, we talked about that. That's Donald Trump's attempt at trying to make the market go up right there. That's all the power the president has to make the market move. That's all he can do right there. That was his day. He said, hey, everybody buy. And that's what happened. Can't do anything about it. All right. Now obviously he has some policy things that he can control the longer term fundamental stuff about the markets. And so they can mess with that, obviously, but the day-to-day stuff they can't. They don't have a lot to do with it. He might scare the market once or twice, or that the longer term stuff is all controlled by Aladdin. It's all controlled by BlackRock. Don't worry about it. It's all a game. It's all a game that's played. All right. So, all right. So that's the name of the game. All right. Let's see. Bruce says I'm an oracle. I had one guy write me and he's like, Len, he says, I said, did you see? I made that call. I called it perfectly. And he goes, yep, that's why I unsubscribed from the Pope and subscribed to you. So, well, we do our best. We just do our best. We're not right every time, but almost all the time. We're right a lot of the time because we've done this a lot, right? We've reverse engineered this model, and so we're pretty good at doing it. And we're not perfect. The markets can still do crazy things that we don't know what it's going to do and why. But we're just playing the odds. We're just Las Vegas gamblers. That's all we are. All right, where'd we get to in our daily deal here? Let's go look. So today, UBI portfolio. We're going to talk a little bit about the UBI portfolio and universal basic income. So I promised what I'm going to do is do an introduction to the concept of this universal basic income. Now that I've bragged and talked about Pitt News Magazine, talked about Aladdin, talked about taking a little bit of profit on our markets, we got to talk a little bit about our universal basic income structure. Now, what is UBI? UBI is just universal basic income. And a lot of people are very concerned about AI taking their jobs. And I always say, if AI can take your jobs, there's a lot of other things that can take your job too. Okay. And one of the biggest things that takes your job is old age, right? So for old age, we already have UBI. We already have universal basic income for old people, right? It's called Social Security. And we pay into it all of our lives so that we can have some UBI at the end of our lives. And how well has that been managed by the federal government? I'll just leave that out there. We all know it's been managed just like amazingly well. And so how many of you think that as you young guys in here are really going to have a lot of UBI, Social Security left when you get to it? All right. Now, if Donald Trump can get it turned around, there might be there, I mean, he's cutting a lot of waste and fraud out of there. 100,000 people were getting money from Social Security fraudulently so far. And that's just the ones they've cut out so far. There's a lot more, in my opinion, but they haven't cut them out yet. Why? Because, everybody over 115 years old, they took off the books. Well, what about, we don't dare take anybody off the books less than 115 years old because they might still be really people. Well, how many people are, let's just give it an estimate there, Elon, between 100 years old and 115. How many people are in there? Oh, tens and tens of hundreds of thousands of people are still getting Social Security between the ages of 100 and 115. Well, you're not going to take those people off? Oh, no, we can't take those people off because there might be a real one in there. Okay, I got an idea. Just take them all off and then they'll call you on the phone and say, I'm a real one, and you can put them back on. I don't know. Probably shouldn't do that, but they can't do that, right? So they've got all these people between 100 and 115 that are still on the rolls that they can't take off because there might be one of them in there that's real. But they did figure that the oldest person in the world was 115 years old. So everybody over 115 years old, they took off, which was hundreds of thousands of people. So, I mean, there's just waste and fraud in these. We have all known all of our lives that Washington is full of den of thieves and robbers, right? We've known that. So, but we didn't know it was to this extent. Well, maybe we did. Maybe we thought it was worse. Maybe it's not as bad as we thought. You ever thought of that? As bad as it is, maybe it's not as bad as we all thought it was. I don't know. I think it's turning out to be way worse than we ever thought it was. For me, it is. Can you imagine? Can you imagine? I mean, Social Security, and then the Democrats. I'm sorry, if you guys are Democrats, you're probably not going to like my channel because Elon Musk is like, he was a Democrat, right? Donald Trump was a Democrat. Half his staff were Democrats. So you guys got to quit picking on the Democrats. I mean, the thing is they're like, Elon Musk is like, we've been looking at this, and it's like 95% of all the fraud and abuse is from the Democrats. The Democrats are the ones who are doing all this shit, but maybe it's because they were the ones who were in charge the last 4 years, right? And then Donald Trump was in charge before that. And I don't think he was really quite privy to all the things that were going on. I think he was still trying to get his, shoes tied through his administration. And then, of course, Corona came along, and then there was nothing else anybody thought about. But the corruption is just unreal, and most of it's from the Democrats, is what Elon's telling us. So, and then, people are burning down. I mean, they do a really good job of all of this, propaganda to make it sound like Elon is a bad guy. All the things they're doing to make it look like it's a bad thing to go fix this. Social Security, I think they can save it just through eliminating the waste and fraud. So anyway, that's the point I was trying to make. All this waste and fraud that's in the government, in the Social Security system alone, I think they can save Social Security and have a really good, stable Social Security system if they just get rid of the waste and fraud. But the Democrats are so pissed off that they're cutting all that money out. It's because it's their money that they're cutting out. It's like they're taking their, they're the ones getting all the waste and fraud. So no wonders they're pissed off, right? They want to impeach Donald Trump for taking all their waste and fraud money away. I don't know. It just kind of pisses you off sometimes. You can't listen to it. You can't concentrate and focus on it. But anyway, the point that I'm trying to make here is that we need to come up with our own UBI system, our own universal basic income. And in the past, it's always been something like, well, we need to do dividends, right? So we do a dividend strategy where we're going to go in and we're going to buy not Tesla, but we're going to buy AT&T because they have high dividends. So let's go and look. And that's the whole name of the game. We're going to do a little bit of math here to kind of introduce you guys to the idea, the concept of UBI, universal basic income, and see how things have changed quite significantly. Where is how come I can't find, oh, there it is. Okay, so we need to come over here, and we're going to come into this little screen here. This is called FinViz, and the reason I like FinViz is because it does the dividends. Track and Trade, I love Track and Trade. Track and Trade is the most awesome trading platform in the world. I mean, it is just kicks ass above anything else that's out there. Now, there's stuff that does more stuff, but sometimes more is not better. More is just more confusing. So Track and Trade, it's designed for traders, and that's what it's really designed for. You just focus right in on the most important things. We don't go off into the weeds with a whole bunch of bullshit. You just waste your time. So this is just a really good little trading platform, and that's what it's designed for, just for the focus in on the most important things and don't waste your time with a whole bunch of other crap. All right, it's got a really nice user interface, makes everything really simple and easy. Oh, I guess I ought to tell you while I'm here, huh? Let's see.
Okay, this is the software I use. It's called Track and Trade. They've got two versions, one for stocks, one for futures. This is the website, trade.com. This is where you download a free 2-week trial. No credit card required. Okay, go download your copy, then come back here, follow along, and I'll show you all my settings.
Isn't that so cool? You didn't even know that was an ad, did you? You just thought that was me. You just thought that was me just being part of the, just kind of being helpful. Didn't even realize that was an ad. And that's such a cool ad. Such a cool ad. All right, now let's come in here. And what were we talking about? Okay, the thing about Track and Trade, the one thing it doesn't have is it doesn't have dividends. So we got to go to another tool that has dividends. Now, this is a neat little online tool. It's just real simple. It's just a chart. Okay, so it's just a little free chart. It's actually, I buy it. I pay it because if you don't pay for it, it pops up ads all over it. So many ads, it just drives you batty. It almost makes it like you can't use their tool because they got so many ads on it when you got the free version. But it's free, so paid for by ads. But if you pay for it, then you don't have to have all the ads pop up. So I paid for it, so you guys don't have to if you don't want to. And then we can come in and do the dividends. But let's come in. I should show you the dividends. We're going to come in here and work with AT&T. Now, the reason I bring up AT&T is because AT&T is one of the very best dividend-paying companies that there is. All right, so usually always at the top of the list. One or two, it's always one of the top on the list for dividends. Now, it pays dividends quarterly. Now, this is the normal, usual thing that has been going on for years and years and years and years and years. And so, the whole idea is that, you build up a big account, you have a lot of AT&T, and then every quarter they'll pay you a dividend, and you can just live off the dividends going into retirement. And that's the whole name of the game. And that's what it's been played for years and years and years. That's how we've always been taught about. All right. The problem with that is their dividends are tiny, 27 cents per share. Now, that's not actually bad. It's actually pretty good. $27 is a share price, and they're going to give you every quarter 27 cents per share. So remember, dividends are paid on the number of shares you own. So you can do the math, and I'm not going to spend a whole lot of time doing the math right now. You can do a little bit of that yourself. But let's say you have $100,000, right? And then you have $27 per share. You can just divide 100,000 by 27. It's going to give you the number of shares. Let's say it's 500 shares. You take your 500 shares, and then you multiply 500 by the dividends that they pay you every quarter, in this case, 27 cents. So 27 cents per share. If you have 500 shares, 27 cents times 500, that gives you the dividends that they're going to give you. And then that's kind of like what we consider free money, right? Not that it's free, but it's the interest, or that's actually not the interest, because it's the share of the profits that they're sharing with you. So dividends are a portion of their profits that they are sharing with you, and that's how much they're going to share with you. They're going to share with you 27 cents for every share that you own. Now, again, dividends are paid on the number of shares you own, not on the value or the amount of money you paid for them. Okay, that's a really key important point that you need to understand. It doesn't matter how much you paid for those shares. It matters how many shares you own, because they give you your dividends based on the number of shares you have, not the amount of money you paid for them. Okay, so it doesn't matter what you paid for them. Every month, or in this case, every quarter, you're going to get your dividends. All right. Now, the dividends will change, but usually they're pretty consistent. See, this is 278. If you come over here, 278. If you come over here, 278. See that? See how consistent that is? Very consistent. So AT&T is very consistent with their dividends. Now, there's some that that will raise their dividends every year, and you get just a little bit higher dividend, and a lot of people will chase after those. So you can go after those, the ones that raise their dividends every year. They call them dividend aristocrats. I mean, if you want to get fancy and know the real names for them. So the dividend aristocrats, and you can go look that up on Google, and they raise their dividends every year. Okay. You have to be careful with dividends, though, because a lot of the dividend value, the value that they use to derive the value of the dividend, is based on the shares. So how much they pay you, it uses the share price, not the number that they pay you. So that is part of it. So the problem is that if a share value plummets, okay, sometimes the dividend goes up. So if a share, let's say it's AT&T is currently trading at $27, and it flushes down and goes all the way to $20, you'll probably see the dividend go up. And why is that? That's kind of weird. The reason they do that is because they want to entice you, encourage you not to sell your shares. They don't want you to sell your shares. AT&T doesn't want you to sell your shares. All right. Now, BlackRock, Aladdin, they might want you to sell your shares of a stock that they want to own because they think the market's going to turn and go back up. So they'll kind of encourage it to fall. All right. And I think that's what's happening with Palantir. They're encouraging Palantir to fall. And how can they encourage Palantir to fall? Well, they got $10 trillion. Actually, they got like $13 trillion. When I wrote $10 trillion, I was wrong. I was wrong by about 3 trillion. What's a trillion here and a trillion there among friends, right? But they're like $13 trillion is what they control. So to $13 trillion wants Palantir to go down, $13 trillion trap Palantir is going to go down. All right. They can make Palantir do whatever. They can make Palantir dance up and down like a puppet on a string. They can make it do whatever they want. And they do. They use their controls and their power to do that type of stuff. In my opinion, they'll tell you that they don't do that. Obviously, they would never manipulate the market. That's illegal. It's unethical because the stock market's so full of ethical people. You believe that? You're such a silly guy. You're such a silly person. Okay, so let's come in here and talk about this. So this is the traditional. The problem with this, if you do the math on this, and let's say you want $50,000 to $70,000 a year to live off of, to do it off of dividends in this type of a style, you're going to need about $2 million. And that's kind of what we've always told people, right? I've been teaching classes for years and years and years. And I'm like, oh, you want dividends? You want to live off your dividends? You got to have about $2 million in your account by the time of retirement so that you can live off the dividends. A lot of people tell me, Lan, I just can't do it. I can't make it. I can't get up to $2 million. I'm like, well, you're going to have to figure something else out then. You're going to have to live off the principal, not just off the dividends. The problem with that, telling people that, it kind of dampens their spirit, right? I mean, if you say, well, here you are, 35-year-old, 45-year-old guy, and you're like, well, I'm trying to prepare for my retirement. I got my little family. I got a couple of kids. Trying to put them into school, soccer games, and try to get them. My daughter likes to do dance, and man alive, have you seen how much they charge to do that kind of stuff nowadays? Holy cow! I don't know if you guys are privy to that kind of stuff, but I got a couple of nieces from my sisters, and they're like, you know what it costs just to put them into dance class, and this is the school. This is like public school. Oh, it's $2,000 just to put them into their dance class or to play the soccer. Oh, you want to be in soccer? Oh, that's only $1,800 this year, to be a member of the soccer team. I don't know. Some of them are a little bit less, but some of them are really expensive. And I'm just like, you kidding me? How come dance is so expensive? That's just what they do. They travel, or they go on trips, or they have uniforms, and they have things they have to buy for their school. So that's what they do. And so they're very expensive. And then these guys are like, and then you walk in, and they're like, okay, how do I, prepare for my retirement so I don't just have to, live off of Social Security? And because Social Security, who knows, it might not even be there. I'm like, well, you need about $2 million so you can live off your dividends. And then they get depressed, and they're like, I can't do it. And then they give up. They don't even try. Right? It's like, well, I guess I'll just live off my 401k and hope that when I'm 70 years old, I have enough money that I can just not die, right? Have money and not eat dog food. So you don't want to dampen people's spirits by telling them that, but there's new stuff. There's always new things changing in the stock market. And I want to introduce you to something that's new. And some of you are obviously familiar with this, but we're kind of having a little start over here. So for new people, and we're going to go into something, I'm going to go to a company called YieldMax. All right. And it's right here. You can go to YieldMax. And this is, I'm not saying they're the end all be all, but they're pretty cool. All right. YieldMaxETFs.com. This is their website. And there's lots of ways to trade the stock market, lots of ways to make money. This is just one. And I'm just introducing you to a way that I like. And it's been working quite well for me. And this is a new company. I mean, technically speaking, they've only been around in the stock market for about 2 years. And that's for their primary offering. When they first started, they only had 2. They came out with 2 ETFs, exchange traded funds that you could trade. And now 2 years later, they got like 30. All right. So they've got a whole bunch of options that you can trade in here. And they do something that's quite unique in the sense that they have ETFs, exchange traded funds. And an exchange traded fund is exactly what it sounds like. It's an exchange traded fund. So it's a fund, generally speaking, of a whole basket of stocks that are put into a fund, and you trade them on the exchange just like you would trade a stock. All right. Now, the thing about the stock market is we used to have mutual funds, and you might be familiar with that. Mutual funds, or stock funds as we call them. All right. And you'd put your money into this mutual fund, and somebody would manage it for you, and they'd create this basket of funds, and you would trade it, and you could only, they'd only give you one price a day. They'd give you the closing price, and you would see whether your market went up or down. Most people didn't pay any attention. They would give it to them, and then these people would manage it. They didn't really manage it. They just bought a bunch of stocks, put them into a fund, and then charged you to put your money into there. And they said, oh, this is really good. All right. And so that's where exchange traded funds came from. Hold on one second. I'm losing my voice. I got to drink some water. So exchange traded funds are just that. They're usually a basket of stocks. Now, YieldMax came along, and they did something very unique. They came in and they created a ETF, an exchange traded fund of an individual single stock. And you're like, well, that doesn't make sense. Why would they create an exchange traded fund and then in that fund only put one stock? Doesn't make sense. Why wouldn't you just trade the stock itself? Why would you trade an exchange traded fund if it only had one stock in it? Doesn't make sense, does it? Why would they do it then? Why is it unique? Why is it interesting? Why is Lan all excited about this? The reason I'm all excited about this is because they don't trade it just by going in and buying shares like a normal, typical exchange traded fund might do, like a basket of funds. You just go in and, buy a whole bunch of stocks, and then you just buy the one fund, and then that diversifies you across all the stocks. That's the advantage of an exchange traded fund, right? They'll put 10 stocks in there. That way you don't have to go buy each individual stock to build your portfolio. You just go buy the one fund. You got all 10 stocks. and that's done for you. It's very easy, and you can trade it, and you don't just get the closing price of the day. You can trade it just like a normal stock. So you're trading all 10 stocks just like a normal stock. You could even go in and day trade an exchange traded fund and buy in and out, and each time you'd go in and out of the trade, you'd be going in and out of 10 stocks. So it's really cool. Though the exchange traded funds, not brand new, but relatively new in the financial world. It's kind of a relatively new thing. So exchange traded funds are really cool, and we like them. So for YieldMax to come along and say, well, we're going to do an individual stock and we're going to put it into an ETF makes no sense. And that's the beauty of it. Nobody's ever thought about doing that before. And so that's why it's so cool. But they don't just trade it by going in and buying shares like a traditional ETF might do. They actually go in and they trade that one stock with options. They're options traders, and they do some very sophisticated option strategies to profit from trading options. Now, if you're not familiar with options, options give you the right but not the obligation to buy the underlying stock. And the greatest thing about options is they give you a high degree of leverage. All right. So you can buy a lot of stock and control a lot of stock, a lot of profits from the stock going up and down with just a little tiny investment. Now, YieldMax even does something that's even cooler. They do what they call a free trade strategy. So they're using almost no money at all, right, in the fund itself to buy the stock, but they control a huge amount of money. Now, of course, it's a little bit more dangerous to do a free trade because the nature of the beast. Now, I'm not going to go into the strategy itself here today. We'll do that in another class, and we've done that before. And we do that sometimes out in our options class where we'll teach you the strategy that YieldMax does. But it's an options trading strategy that they're trading, and they do it on a single stock, and they do it in an ETF so you can participate. So it's like, well, I want to trade options, Lamb. I want to trade stocks with options. I want to trade options on stocks. And you're like, but I don't know how. That's really hard. I'd have to learn how to do that. And sounds fun, but it might be a little bit beyond me. Well, okay, if you want to trade options on Apple, for example, you want to trade Apple, but you want to trade options, and you don't want to really do it yourself because you don't feel confident to do it. Well, you just give your money to YieldMax, and they'll do it for you. They'll trade options with this sophisticated option strategy, and they'll do that on Apple, or they'll do it on Disney or Netflix or Microsoft. You can see down here in the corner, they've picked a whole bunch of really good stocks. Here's ExxonMobil. Here, I'm probably in the way. Let's move me over here to this side. But you can see as you kind of pan through here, you can see all the different stocks that they trade. They've created ETF, individual ETFs on JP Morgan Chase, AMD, there's PayPal, there's XYZ, I don't know what that is. MRNY, we know Moderna. I don't know what that one is. YMAX, that's one of their own. YMAG, that's YMAG. That's kind of a cool one. Now, this is one, I'll tell you, where they actually did go in and they created with their ETF, they put 7 stocks into YMAG. YMAG is actually the Magnificent Seven. So Apple, Amazon, Netflix, Google, Tesla, Meta, and NVIDIA. That's the Magnificent Seven, right? So that's 7 stocks. They take all 7 of those stocks, they put it into this fund. So that becomes a real ETF, right? Exchange traded fund. But then they trade it with options. They don't trade it just like, oh, let's go buy some shares. If you want to do that, if you just want to buy shares, it's MAGS, M-A-G-S. So you can go look at MAGS. Let me show you. We'll just pull up our little charting thing here. Let's go and let's just pull up this one. And we'll go new. We'll just go like this. And we'll say, so this is MAGS, M-A-G-S. M-A-G-S has no dividends, all right? So this is just if you want to buy what we call the Magnificent Seven. This is Amazon, Netflix, Google, are the ones I just labeled off. So you can just come in and buy this, and then that would be giving you the Magnificent Seven. And they would buy it with shares, all right? So you're just diversifying across those 7 stocks. You buy it here, away you go. You're happy, happy, happy. You've got yourself your 7 shares. But this YMAG does the exact same thing, but instead of buying it with shares, they're trading options on it. And it's a little bit different. I need to go into a little bit greater detail about how all this works, but that's what this class is all about, to go into detail about how YMAG works and how it's not just the same old thing. It's kind of got a twist to it. It's kind of weird. It's kind of different because they're trading options on it. So, and then they're free trade options. So they're not really taking the money out. So you put money in. What are they doing with the money? It doesn't really go into the stock. And it's just a single stock. Now, this one's going into all 7 stocks because it's YMAG, so it does 7 stocks. But they do also, if you come back over to their website, let's go look at one here. Snow, there's Airbnb, there's Fiat. That's a short position on on one of the currencies. We got dips, Babo. Let's look at some others. Let's see if we can see some that we recognize. There's Palantir. Oh, let's click on it. Let's go into Palantir. This is their Palantir offering right here, PLTR, distribution rate. Look, 30-day SEC yield is 2.36%. Distribution rate is 90.04%. That's unheard of. That's unbelievable. It's like, what the hell are you talking about? That doesn't seem real. Compared to AT&T, how can you do that? Distribution rate of 90%? What are you talking about? Well, it's because we're trading with options. Are options a little bit more risky? Yeah. Options are a little bit more risky, but they don't have to be. You can, it depends on how they're managed. These guys are professional options traders, so they manage it very well. So if we come back over here to where's our little program right here, where we were looking at AT&T, and we pull up Palantir. Now, look, Palantir, this one has a different symbol. So if we come over here and we pull up Palantir, we know it's PLTR, right? PLTR. So there's Palantir, and there's what we were just looking at, and we had our option on there, and we were happy because we got out at the top, and we put on our put option, and we made money on the way down, and we just made money hand over fist on Palantir this last month, right? So we're very happy at that, but that's Palantir, PLTR. Great, no dividends. Palantir doesn't do dividends. So let's go over to Palantir over here, and I'll show you. We'll pull up Palantir, PLTR on the dividend sheet. There it is. Same little thing. Got your little calculator on there. But that's the same chart, right? But there's no dividends. Now, these are earnings, right? See little earnings things in here? These are listed in here as earnings. So you can see their earnings were all green, positive, great earnings. Why did it flush? It flushed because of the nature of the beast, how it was within the mathematical modeling system and the probabilities. All right, it has to do with probabilities, not with earnings. Earnings come in great green. Why doesn't it go up? Because it didn't come in, wasn't proper setup. Okay, so stick with me. You'll learn all that stuff. And then as we come in here, there's no earnings. You'll notice on Palantir. So if we want to do or dividends, if you want to do dividends with Palantir, you have to go to a different symbol. So you go in there, PLTY, not PLTR. PLTY. And if we go into PLTY, that pulls up the YieldMax ETF, Exchange Traded Fund. Now we're going to get rid of all these drawings in here because Land's been drawing pictures on for another class. So we'll come in here. How do we delete these? Here we go. Yes, remove. So this is your PLTY. All right. Same one we see over here on their website. Where's their website? Land. It's over here. It's on the same tool right here. So this is their website, PLTY, YieldMax PLTY. It's their fund, and you find it in the stock market. So it's right here. And if you want them to trade PLTR, Palantir, with options for you on your behalf, you can give them your money, and they will trade options for you. And then the way that they give you the profits from trading the options is through the dividends. All right. Now, the dividends are, traditionally speaking, dividends are profits made by the company, right? So a share of the profits. Now, AT&T, they do telephones and they do telephone services. So when they make money selling telephone services, they share that profit with you. Well, YieldMax isn't sharing you the profits from the company. They're not sharing with you the Palantir profits because they're not Palantir. They're an ETF of Palantir. So how do they make money? Well, they do it by selling options, trading options. So they're making money, profiting by selling and trading options, and that's the money that they share with you. Now, it's more aggressive. You have to say, could there be more risk? Yes. Well, it's an options trading strategy. They're very good at trading options, but they don't always make money, right? They make money if the market goes up. They don't make money if the market goes down, because these are long call positions that they're trading, and they're selling premium, and they're collecting premium, and they're doing all kinds of neat stuff. All right. It's beyond the scope of this class to tell you what they're doing, but they're trading options on Palantir. And then when they make money with their options, they share it with you. So if you want to give them money to trade options on Palantir for you, the way you do it is you buy PLTY. You put your money into PLTY. Now, PLTY is going to give you dividends based on the number of shares that you own, just like a traditional dividend. But look at this. When we click on that little dividend number, they're going to give you $5.32 per share. What? What are you talking about? They're going to give you $5.32 every month, not every quarter, like AT&T. AT&T every 3 months. Palantir Their PLTY, Yield Max, because they're trading options, they're going to give you the dividends, which is not really dividends, right? We call it a distribution of the share of the value that profits they've made from trading the options on Palantir. They're trading options on Palantir. And so they're going to give you $5 or let's say last month, that's how much they made, right? So they share it with you. So these go up and down. So you'll notice that AT&T, they were the same every quarter, right? They just give you they just kick you out a little bit of money. It's nothing to them. All right. But this one here, you're going to notice that it changes every time. See, this one here was $5.32. Well, this one, they made more money. They made $5.93. This month, they didn't make as much money with their options. So they only gave you $2.98. Well, this month, they gave you $3.58. Well, this month, they gave you $3.34. Well, this month, they gave you $2.20. So depending on how much money they make trading their options is how much your dividend is. So your dividend goes up and down in value, but look at the difference in value. I mean, that right there was $5 per share, and a share price is $62. So let's say you put $100,000 in there. You do the math. I'm not going to do it for you, but you do the math. Let's actually do the math together. Let's do it on this one. Just for fun. Let's pull up your little calculator. All right, pull up your little calculator. I'm going to switch back over to this side of the screen. So pull up your little calculator on your phone, and this is how you're going to do it. We're just going to go in there. Well, let's say we have $100,000 because that's all we've saved in our whole life, right? We tried to do the $2 million. We just couldn't do it. So we got 100,000. By the end of our life, we got $100,000. You say 100,000. So we're going to take $100,000. Okay, there's your 100,000. We're going to divide it by the number of shares, 6214. So we're going to go divide by 62.14. That's how much shares cost. It equals. That's 1,609 shares. So you have 1,609 shares. You gave your money to Palantir, and that's how much you gave them, $100,000. Now, they're going to give you, like in this example, last month, they gave us $5.32 per share. We got 1,609 shares. So we're just going to take that number, multiply it by 5.32. That's all there is. That's $8,561. $8,561 per month on your $100,000 investment that you couldn't save any more than $100,000 because you were trying to save $2 million, but you had kids in soccer. That's what I call UBI, Universal Basic Income. And that's what we teach in this class. All right, guys, that's all I got for you today. Hopefully you stuck with me to the end, and hopefully you had fun. And like and subscribe and come back and be a part of it. And we're going to go through this stuff more and more and more, and we're going to do more of it. And we're going to learn more of it. And we're going to understand it. We're going to help you. We're going to set up spreadsheets. We're going to do all that kind of stuff this summer, Tuesdays and Thursdays. Wednesday, we're going to do day trading because that's fun too. You know, if you don't have money, you got to make money. So we're going to teach you how to day trade. And that's what you can do for income, so you can put it into Palantir. All right. So you go day trade, you make a little bit of money, a couple $100, you put it into Palantir. You do a little day trading, make a couple $100, put it into Palantir. Do a little day trading, lose a couple $100, take it back out of Palantir. Goes both ways. All right. Door swings both ways. No, don't always make money. All right. So that's the nature of the beast, and that's how it works, and that's how the cookie crumbles. And if you want to know the name of the software that I'm using, it's called Track and Trade. I already showed you my little ad, not ad. And you can get your software over at trackandtrade.com, download it, come and join us, be a part of what we're doing here. And let's come and say hi to a couple more people. Anybody else in here want to say hello? We got John out here saying hello. We got Bruce saying hello. We got Kirk saying hello. We got Chad. It's nice to see you guys. Kirk from San Francisco. Bruce says, Palantir, great earnings. They raised their outlook. Stocks today. I'm in Oracle. All right. So we've talked about Chad, Tabor. Tabor's in here. Good morning, Tabor. It's great to see you. James Reardon. We got you guys all in here. Bruce, great lesson. Thank you very much. Hope you enjoyed it. And that's all I got for you. So I got to sign off with this new little thing here. So if you had fun, please like, share, and subscribe. And we will see you guys tomorrow afternoon for the day trading class. All right.
All right. That wraps it up for today. If you got something out of this, do me a favor. Like the video, subscribe to the channel, and share it with someone else who's trading or learning.
Hey, Don't forget to tell them to subscribe to Pitt News Magazine.
Oh yeah, definitely subscribe to Pitt News Magazine. You'll thank us later.